Hey now, I'm back with another exclusive trading system that is designed to catch breakouts in the market and was proven extremely profitable over 100 consecutive trades. At the end of this video, I am going to share with you 7 of my very popular optimization tips that can build on this extremely simple system to increase its versatility and profitability. And if you are not subscribed to this channel, then the market can do this to you. I call this system the easy breakout. And like most trading systems, it can be adapted to Forex, crypto, options, stocks, indices, or any instrument that has significant volume and market participants. This trading strategy utilizes 3 free TradingView indicators. As always, links and settings to all indicators are listed in the description below. The first indicator is the exponential moving average, or EMA. The length will be set to 200 and the color rigged for white. The 200 EMA serves as our overall trend direction indicator. We will only be longing above and shorting below this white line. The second free TradingView indicator are the ATR bands. The ATR period will be set to 14 and the upper and lower ATR bands will be set to 2. The color will be rigged for orange. The average true range, or ATR, is a J. Wilder indicator and is a good way to measure recent market volatility. In the easy breakout, the orange bands will be used to set our stop loss levels and thus calculate our profit target. The third and final study to place on the chart is a custom indicator by one of my favorite PineScript authors called Breakout Finder. The inputs will be left at default, and I am going to uncheck the option to display the resistance lines. This indicator attempts to calculate pivot points in market structure and signal when there is a break of resistance, which can portend a breakout. A blue triangle underneath a candle represents a buy signal, and a red triangle above a candle signifies a sell signal. The Breakout Finder will provide our entry triggers. Let's go over entry criteria and review some examples. As always, system rules and details are listed in the description below. This chart is Bitcoin versus the US dollar contracts for difference 1-hour candles. A contract for difference, or CFD, is a financial instrument that allows financial exposure to an asset without actually owning it. The rules to enter along on the easy breakout are: first, price must be trading above the 200 EMA in white. The second rule requires a Breakout Finder buy signal, which is this blue triangle below the bullish candle. Our rules are met when this candle closes. That is our trigger candle. We place our stop at 2 times the average true range value below the trigger candle, and that is represented by this orange band. Our target for this setup is 1 to 3. And after 2 other entry signals, this one hits the target on this very bullish candlestick. If you enjoy this content, make sure to click that like button. I have one more long example. Price is trading above the 200 exponential moving average. There is a Breakout Finder buy signal. Everything converges on this candle and it serves as our trigger. The stop is placed at the ATR band below the entry candle and 1 to 3 is our target. And this example hits the mark. Now we flip to shorts. This is what I will test for shorts. The first rule requires price to be trading below the 200 exponential moving average in white. Next, a Breakout Finder signal fulfills our second rule. When this candle closes, we have a valid setup and it becomes our trigger candle. The stop is placed at 2 times the average true range value, which is this orange band above our trigger candle, and we are going to target 3 times risk. Upon the break of support of this consolidation zone, this example rapidly hits the target. I am going to show you one more quick short example. Price is trading below the 200 EMA. There is a Breakout Finder sell signal in red. This is our trigger candle. The stop is placed at the ATR band in orange, and the target is 1 to 3. The profit target is hit on this trend continuation pattern. I am going to give you some insightful ideas on how we can improve this system along with a trader's landing score. And now it's time to do what I do. If you enjoy this content, hit the like button. Remember, this is just 100 tests on one instrument. If you are thinking of using this system, please do all extensive back and forward testing and be sure to let our community know what you discover. This test was done on Bitcoin versus the US dollar contracts for difference 1 hour Japanese candlesticks. It took just short of 21 months to find the 100 setups. This dataset provided for a win rate of 35% and a profit factor of 1.62. And I have some ideas on how we can significantly increase those numbers. Most wins in a row came in at 3, and most consecutive losses turned out to be 6. But because our risk versus reward was 1 to 3, the total gross gain on account, risking 2% per position, came in at 80%. So due to the entry criteria of this particular trading system, the equity curve here is misleading. From the test itself, you can see 3 triggers that were counted, but realistically, you would only take one of those signals. The same is true for the reverse. When this phenomenon occurs, equity curve analysis is limited. What score would you give this strategy? Let me know in the comments below. I give this system a Trader's Landing score of 7. Because while this system is extremely easy to follow, accounts for previous market volatility to a certain degree, there is a lot of headroom for improvement. Remember, the enemy of great is good. I have 7 ideas on how we can improve this system. First, there were some strong trends during the test like these, where the indicator never triggered. This is an indication that the indicator settings need to be set to a more sensitive level during these market conditions. Second, when you are using a risk versus reward over 2 times risk, one must consider where to eliminate exposure or take partial profit. The win ratio and profit factor could have significantly increased by moving the stop loss to break even after the 1 to 2 level was hit. The next tip is key to trading breakouts. While the indicator attempts to tell you when a breakout occurs, you should be able to see it yourself. This is a clear false signal. But this signal comes with a break above this consolidation level. Before you enter, consider 3 things. Is the market currently trending or consolidating? Is there an obvious area of resistance? Is there some other confluence we can add? Furthermore, taking a look at the daily chart for the test period, we can see many impulsive moves. Consider only taking longs during these periods of higher time frame impulsivity will certainly bode well for your account balance. This next optimization tip relies on some simple subjectivity, but can have a huge effect on your win rate. Setting your stop at the previous swing low if you are longing, or previous swing high if you are shorting, can save you in many instances. Sixth, like I went over in this video, when trading a low win rate, high risk versus reward system, you must have a strong trading mind with a fully developed psychological outlook, thinking in probabilities. Because if your emotions take control, you will start to stray from your system, which will lead to catastrophe. This tip is something that I try to stress because I think it is neglected by newer traders. But volume is an excellent leading indicator that can tell you what the market is about to do. We can see on this chart, these signals are accompanied by an increase in volume, which can portend a trend continuation. Check out this playlist for more profitable systems. And have a great day, because you deserve it.